And we are live. Hello, everyone. Welcome to a new episode of Blockchain Talks. Now, in today's episode, I'm going to talk a little bit about supply shocks and halvings. Now, why do I want to address this topic? Not really any particular reason, just wanting to learn you guys something. Main reason I have chosen this theme has actually to do with me seeing a few influencers calling out, yeah, there's going to be a supply shock and Bitcoin is going back to the moon. I want to, rebuke those statements a little bit. Anyway, before I start, let's take a little look at the current state of the market. Refresh here. I'm at CoinGecko at the moment. As you can tell, markets are a bit volatile, especially if I draw your attention here to the little graphs of the last 7 days. So seemingly little dip, but leveling out. Now let's zoom in on Bitcoin here. It is above the 45k levels. In a certain sense, that's positive news. In one of my previous social media tweets, I mentioned, look, I'd only dare say that the bull run is resuming if it can keep up above the levels of 45k, so that it trades above those levels for, an extended period of time. For some time now, we are at the 46k levels, as you can see here. However, let's start zooming out, so a little bit bullish on the 24-hour trade. Link chart, as you can see here, was a little bit a bearish sentiment here, a little sell-off. Might wonder why. Now, if I start to zoom out on the weekly, I might say we are actually trading sideways more or less. My reason, there's been a little dip here, but we are recovering and, trading at current levels. In a certain sense, median here at 46,500 approximately. That's current value if you're trading on the weekly. 14 days, you might see we're actually in some kind of renewed bull run. Since 2 weeks, we saw or are seeing here, we came from the 42k levels, went straight up ahead, traded above 47k's, dipped down, and are now trying to, trade around current support level, establishing a support level at 46k. It's more obvious if you go towards the 30 days. You can see we came back up climbing from 37k levels. Are now trading sideways here. Now, the more you zoom out, the more you see what is happening here. Back at January, so you can see quite a lot of volatility here. We are not trading above, the accumulation period for quite some time. Did I say, look, we are trading sideways in this market? And perhaps faultly, I presume this one was going to be a local top, a little deviation, that we would be seeing something like this occurring. It might still occur, it's still young, however, this is quite layered and looks like a quite natural growth. So I may be swallowing my words here and saying, look, we're probably going to stay here at around these levels. And for that, I'd say we're probably looking at something inverse pattern here. Might be going upward. People are already calling out for 100k Bitcoin by the end of this year. Once again, I'm not all too sure about it. Sure, there is some bullish sentiment, but I'd only say we are heading nicely back up if we break above 50k levels. But yeah, let's just say I'm positive about the market. I'm happy to see it trade above a certain level. Accumulation period seems to be over. However, I wouldn't start making, predictions of above 50k and we are going to reach the 100k by the end of this year just yet. Quite a lot of metrics are showing here that the market is stabilizing and, people are trading normally. So we're back at trading levels from before the halving in 2020. So it's finally back to a more calmer period of time. You can actually see it here. Zoom out to the yearly chart, or a little bit in the inverse of here. So But I think we're going to get sideways later. Well, for continuation of this, um, how to say, pattern market, we're going to continue sideways. I believe heavy corrections have already occurred. However, I wouldn't be surprised if other ones would occur. Dips here are 36, lowest points even 30 even. But yeah, you can compare as much patterns as you want. Each market, each day is a little bit of a change, and that's what I touched upon in one of my blog posts later on, more about it, about Bitcoin cycles and how it works. Um, so yeah, let's just delve into it. If you want to have my prediction about the ongoing market and what will happen in the market, I'm going to say we will continue trading sideways, probably at around this level somewhere. So tops somewhere 47, 48K. Lowest, I'm going to say here somewhere slightly below 45K, with 45K being heavy support. Perhaps 46K becoming current support levels. It seems like it by reason. Touched here, went back up, touched here, went back up, went down, went back up. So probably 46K is your current support, and highest will be 48K. So that's approximately the trading range in which you should be putting your trades. Not financial advice, of course, but it's what I can see here on the charts. Now, let's move on to a topic, a blog that I've written, supply and demand, halvings and supply shocks. Like I mentioned in the beginning of this video, there are quite a few people, few influencers, saying there's a huge supply shock coming through. The exchanges are at an all-time low of various cryptocurrency, especially Bitcoin in the crosshairs. Supply shock, and it will moon and skyrocket once again towards all-time high levels. Well, I'm going to say that isn't necessarily true. While it is true that supplies are on their lowest on exchanges, everything has to do with the fallout of the halving event, which occurred in 2020. As you can see here on screen. So I'm going to read aloud here. Let's talk a bit about supply shock. Yeah. As many of you know, thus Bitcoin and all other cryptocurrencies at base level function on the simple economic premise of supply and demand. How is value established? You have a certain supply of a certain good, and people ask for it, and they will give a fair price in relation to how much there is available and how much they want. Simple as that. This makes halving events so important. A halving event is about rewards from mining being slashed in half. For comparison, Bitcoin before the halving in 2020 was mined at a rate at 6.25 Bitcoin per block. So every 10 minutes, 6.25 Bitcoin entered the market. 12.5, and it has been halved in 2020 towards 6.25, I believe, in the hopes I'm not mistaking here. Messing things up, sorry. But yeah, just take those numbers. So before the halving in 2020, let's just say it was being mined at a rate of 12.5, then it went to 6.25. That's a halving event. So the rewards, that's the amount of Bitcoin being newly introduced to the market. You know, after such an event, only half of the newly created coins will enter the market. Many proof of work based coins, such as Ravecoin, have these halving events. So many coins have a certain halving event, mostly Bitcoin clones, and I'm talking about Bitcoin Cash, Bitcoin Gold. You've got Ravencoin, which stands on its own, is about NFTs. Big fan of those guys. They all have halving events pre-programmed on the blockchain. There's nothing you can do about it. It's programmed for slashing the mining rewards in half every so often. Continuing by saying it enabled a supply shock to take place. Now, what is a supply shock? A supply shock means that your supply is suddenly being reduced while demand is either growing or remains stable, meaning there is less to go around. That's what a supply shock means. Bitcoin was dominant coin, is at the front of the market. Whatever it does, the entire market will follow. It's one of the reasons why I am doing a market analysis, that I'm not going to look at how other altcoins are performing, how Ethereum, Chainlink, Ravencoin, etc., are performing. I'm going to take a look at what Bitcoin is doing. By reason, that one is, well, stands prime. It is the most dominant coin, with currently, how much of a percent here? Dominance, currently 39% of the entire market cap is from Bitcoin. I know back when I was writing my Ultimate Crypto course, and it's probably still written in it, we were still at 50%. A few days ago, I know we were at around 42%. It fluctuates depending on market sentiment, but as you can tell, still over 1/3 of the entire market cap is in hands of Bitcoin. So to say it's a dominant coin is still underrated. Anyway, most dominant coin, remember that one. And yeah, in 2020 did its fourth halving take place. Through previous cycle, we know how markets will behave. A rundown can be found here. It's one of the previous posts I made, wherein I talk a little bit about Bitcoin and markets insights. So what the influence of derivatives, futures, and ETFs are for trading, the effect of the pandemic, Bitcoin, and, well, the main gist of the blog itself, the blog post, how Bitcoin works in cycles, what those halving events are. And I gave a few examples here about rewards. As you can tell, yeah, I was wrong. Block reward 6.25, the third halving. Okay, I was correct. So before 2020, block reward was at 12.5. Here, after the halving, 6.25. So within 2 years, in 2024, 2025, the fourth halving, my apologies, will occur for Bitcoin, and this one will be slashed towards 3.125 Bitcoin per block, so mined every 10 minutes approximately. Now that's the halving event. Now I'm going to get a little bit deeper into it here. This was just for side information. Supply and demand. Now, as you guys can tell, if you have such a halving event, it means less Bitcoin is entering the market, less fresh Bitcoin is being minted. It implies that supplies, existing supplies on a variety of exchanges, are being introduced to the market for trade, for peer-to-peer payments, is suddenly being slashed in half. Sure, you have those which are still available, but we are going to assume they are all locked in a variety of wallets. Supply we are talking about for supply and demand are the fresh ones entering the market, which can be bought up and which can be traded. With that halving, that supply is being reduced. Continue. An important metric when trading is not only knowing where we are in the BTC cycle, also knowing what kind of other events and metrics can influence value. Wars, pandemics. With this, I actually want to direct you guys towards world events which have an impact on the economy. Because whether you like it or not, and that's what I'm explaining here in supply and demand, Bitcoin and the cryptocurrency market is getting more and more intertwined with the classic financial system. How so? Well, through the use of ETFs, derivatives, of stocks, etc., etc. Stocks, yes, I'm really talking stocks here. There exists a crypto.com stock, Coinbase stocks, and these are ultimately linked towards the value of Bitcoin. Trading those will have an influence on the cryptocurrency market. By reason they share, well, they get their value from the amount of trust investors have in, well, Coinbase, crypto.com, etc., but indirectly also to the cryptocurrency market. And with ETFs and other derivatives for trading, well, you aren't really trading the Bitcoin itself, but you are trusting and speculating on its future value, on the future value of Bitcoin. You're speculating with, well, the amount of trust people have in Bitcoin. And in order to do that, well, do these trading platforms who have those ETFs, who have those options and derivatives, they need to buy in Bitcoin, and through the use of a few smart contracts and agreements, Well, we'll say, look, you can trade Bitcoin in our place, but they hold the real Bitcoin. You are merely trading with derivatives. You're never holding actual Bitcoin. But that in itself also has an influence on price and value. Reason? Well, to an ETF or any option of derivative, well, you need to have an underlying asset, and those platforms, and I'm really talking about FTX, I'm talking about Robinhood, that application from a few months ago, which caused some controversy. Well, they bought in the actual cryptocurrency, but its users weren't trading it. It's one of the reasons why you couldn't cash out your gains in crypto, by reason you were actually trading money and never had ownership of BTC. So it's one of the reasons why I'm always saying, do not trade with ETFs, derivatives, or options. If you want to have factual ownership, buy the Bitcoin or any other cryptocurrency itself. Either you start mining it, either you go to a centralized exchange like Coinbase, Binance, Kraken, Bitvavo, and many others like Gemini. You buy it, you transfer it towards a private wallet, you keep it. That's the best thing you can do. Don't trade those ETFs and options. So that's actually what I'm saying here. You are merely speculating, red flag. So do not speculate. Have ownership. With the ownership of said crypto by third-party platform, you do not own the Bitcoin. The platform does. It's very important to understand and know. The platform, exchange and trading will act like a speculative whale. Many whales within the cryptocurrency markets are wallets related either to developers or immediately related towards exchanges, towards liquidity pools, etc., etc. In this context, I'm pointing out at centralized exchanges and towards ETFs and options and derivatives. It is a quite unhealthy position as it can leverage the market. If everyone, for example, says we're going to start trading cryptocurrency and Bitcoin through the Robinhood brokerer, that Robinhood brokerer will start buying in cryptocurrency. It will fuel its own reserves in order to create their derivatives and options that others can trade with. Robinhood will own all those cryptocurrency. You, as a user on that platform, don't. You're merely speculating. You have no ownership. And as a result, well, management from the Robinhood broker application can say, look, we no longer support cryptocurrency trading, which means they will cut off their entire market, but they still have the holdings from which they can derive value. So start leveraging the market by reason they have become whales, because a lot of other people have been investing for them to buy the Bitcoin into their wallets, but without them, so the users haven't any gotten actual ownership. So that's the reason why I say it's quite an unhealthy position. It is one of the reasons why I keep on stressing out, I believe it's the third or fourth time here during this live stream, whereby I say ownership, buy your own Bitcoin, hold it in a private ledger, do not leave it on a centralized exchange, do not trade options and derivatives through brokers, own the factual deal. Very important. Buy the real deal, so fifth time already. This may not stream of crypto and BTC from exchanges. Decreased supply and even or higher demand will result in the asset becoming more valuable. Hence why BTC rallies when the market settles and tries to find a new equilibrium with the reduced supply. So I'm talking here about supply and demand, about the halving. If you start withdrawing your cryptocurrency and Bitcoin from exchanges, it means there's a decreased supply for the exchanges to let others buy. For example, on Coinbase, say they have, I'm pulling numbers here out from my R's, but let's just say they have 100 Bitcoin in their supply, in their wallet reserves that people can buy. They have their special algorithms whereby they say, look, 0.05 BTC is for that person on our self-hosted wallet, and that guy there has 50, the other one 20, the other one 0.001, or etc., etc., etc. But 100 Bitcoin remains within the wallets. Now, if all of the users start withdrawing their Bitcoin, well, the supply on the exchanges begins to diminish. But as more and more people subscribe to that exchange, they want to buy your Bitcoin. But as the supply is decreasing and demand increasing, will value go up? So the best thing you can do is to withdraw your Bitcoin from exchanges. It will push up prices, as it is still the central point whereby people can get their hands on Bitcoin if they do not want to mine or work for it. Simple as that. It's actually what I'm writing here. It means an outstream of crypto and BTC from exchanges, decreased supply and even, so level or higher demand will result in the asset becoming more valuable. Hence why BTC rallies when the market settles and tries to find a new equilibrium with the reduced supply. I'm talking here after the halving event. Show it here, a little image. The effects of a halving event. Halving of Bitcoin took place in May 2020. Supply corrected until October 2020, which initiated the bull run. You can see this very clearly on the graph below. And for that, I'm going to open up this one here. So that's the same graph that I'm showing you here. So halving was in May 2020, somewhere here. You can tell halving took place, but no immediate effect on the supply. So black line is value, blue line is the reserves on the exchanges or supply on the exchanges. Look at here. So somewhere May, somewhere here, halving took place. You can see not an immediate change in the supply on exchanges, perhaps even a little uptick, sudden downtick, but people were still selling to the exchanges, but remained kind of level, not more or less more than here, May. But each halving takes some time before it settles into the market. And suddenly you see here a huge inflow. There's more supply on the exchanges, despite value increasing. And this is what I've called in my previous blog post a pre-halving event. People know value will be going up, or people see value going up and they've been holding for quite some time. So what's their first thing that they are going to do? They're going to sell their cryptocurrency in the hopes it will go down later on and buy at a lower price. That's it. So selling at a higher price and buying up at a lower. That's generally pre-halving hype. And you can see here, it went up somewhere July 2020, and supply started to decrease. That's the market settling towards new levels on, well, the supply after the halving. And you can see it clearly. This steep slope isn't outflow, it is general demand remaining level, but the supply being reduced by reason there's less Bitcoin entering the market, entering the exchanges. And as a result, we have a bull run. You can see it here. Value going up, whereas supply on exchanges remains kind of level. There was a little bit of a sell-off here. People taking profit. You see here high levels of value. Goes down here in the supply. And people saying, okay, we are now going to take our profits. So what happens? They sell off to the exchanges. You can see an uptick here. And nicely coincides. Inverted. As you can see here, level, some volatility. Goes down, goes down, goes down. And you see here there's a little top. It implies a whale has been selling off his Bitcoin. The supplies on the exchanges suddenly tick up while the price crashes. It goes back down, value goes up. By reason, demand hasn't decreased. Demand remains level, but supplies are getting low. That's what occurs here. Now, this one is actually a bit bizarre. By reason, you cannot immediately see that, well, the supplies are dwindling. Now, you can see at overall here, supply are reaching lower and lower. You are even at, I believe, a little all-time low for the exchanges here, and you can see prices going back up currently. That's entirely normal. Supply is related towards demand, and the Combination of both gives you the value of Bitcoin. A few things might occur which deviate from that general stance, a little bit like what occurred here, lots of volatility, whereas not much was occurring here where it concerns supply. Same here. It was a little sell-off before it reached back up. So actually, this kind of event may have sparked this one. A little bit of speculation, a little bit of hopium and hype before it went down here. So as you can tell, it nicely coincides. We are still in a phase in this market where things are settling. So expect things to trade sideways. The reason I see a lot of volatility here, but the supply on exchanges here doesn't really seem to budge or move a lot. Generally, the market correcting. It might be the case here that Bitcoin is temporarily overvalued, and with dwindling supplies, that this move now is more or less of a correction. That we are now once again reaching decent levels of value when compared to the total amount of supply. That's something entirely different. It's more advanced, not going to get deeper into it. A few other metrics that I want to share with you guys. So you can see there's quite a few important ones here. With exchange reserve. The inflow, I can't show you guys, is actually also an important metric. It shows how much Bitcoin, or how much, well, in this case, Bitcoin is entering cryptocurrency exchanges. This is in green, but also the outflow in green. It implies, well, the demand is increasing, and more or less level of, I'm losing my words here. If the inflow on exchanges is level with the outflow, it implies we will have some sideways trading. However, if the exchange inflow is higher than the outflow, well, in that case, you might say people are generally selling off. As you can tell, little difference here. Goes probably level, but we can't see it immediately and correctly. But also exchange outflow here. Very important to know. Compare these two. As you can tell, the outflow is bigger than the inflow. So that's less inflow here and much higher outflow. And so with that, I conclude this episode. Thank you guys for watching. If you have a few remarks you want to make, little mistakes I made, because I know I've did a few F-ups during this live stream, feel free to point them out. In any case, most of the information, well, all the information shared here is quite correct. Have been tried and tested by a variety of traders and crypthusiasts over the years. Well, like I said, I'm going to enter the live stream, so thank you guys for watching. Please like, subscribe, do a shout out on Twitter. Please leave a comment down below, or whatever all those YouTube influencers say. I'm just an amateur here. Thank you guys for watching, and until next time.